Hi, it's Adam Hewison. I'm coming to you as always from the digital studios of MarketClub, and the market we're looking at is the NASDAQ, and the symbol is COMP. We frequently looked at the Dow, we've looked at obviously the S&P 500, but this is the same pattern that's happening with all of these markets, and the pattern I want to show you is a very powerful Japanese candlestick pattern, and it's called a negative engulfing line. And this is what it means. A negative engulfing line is a red line like this, and it encompasses the previous bar. Now we're doing this on a weekly chart, and this is why it's so powerful. Is a negative engulfing line, and it puts in a top for the moment around 2,350 on the NASDAQ. Now why is this important? Well, it's the same thing that happened here. This is a negative engulfing line, not quite as big, but it encompassed the previous week's action. And it's the body that's important, not so much this part here, but the body encompasses the previous body. And you can see that with our Japanese candlestick book that we've made available to our members. And if you'd like a copy, just either give us a call or send us an email. We'll send one out to you, no problem. But this is a very negative signal in and of itself, in the fact that it's put in a top in this market. Now you can look at other time frames, and you can see other time frames when this has happened. I just want to give you two quick examples of this has happened in the past. This is nothing new, these negative engulfing lines. Some people call them bearish engulfing lines. I like to call them negative engulfing lines because I think they're negative to the market. And here we are back in this period right here. This is a weekly chart. Again, we're looking at the S&P 500, and this is the week of October 15th, pretty much close to the high of the market, and there's that negative engulfing line right there that actually did signify the top of the market. So market comes down, we have another rally, another negative engulfing line, and this is on May 19th, the week of May 19th. That's 2008, and this is the October 15th, week of October 15th, and this is 2007. So they do really move, and look at this last one, really did capture this move on the downside. So again, negative engulfing lines or bearish engulfing lines are very important, and you should pay attention to them when they occur. Other thing to look at in the NASDAQ is this level right here, and it's right around here. If we close, let's say, below this level here on a weekly basis, then we're going to see this market continue to move lower. Our triangles, basically, I'll put those on just for you for a second and show you. Our monthly triangles are basically still negative from 2,140. Even though the market's a little bit higher, you could still say the trend is down. Our minus 75 level is not a positive sign. The only one we're waiting for right now is the weekly to kick in. And when that does, it's going to be very, very negative. So we may see some more choppy action. But if we close lower this week, I would say it's a pretty good bet that we put in a top for the market, then we're going to see another leg down. And it could be quite severe. So let's pay attention to that. This is Adam Hewison for Market Club. Every success. Remember, negative engulfing lines, they're important.